Another video. Now today we are going to take a look at the Usdcad from a technical, fundamental, order flow and sentiment perspective. Now if you are new to the channel, a sub would be appreciated as I provide valuable educational content on a daily basis. And if you enjoy the video, please smash the like button for the YouTube algorithm. And as always, let me know down in the comments below exactly what it is that you would like me to cover in my next video. Now we're going to start with the technical analysis. But before we get started, if you are interested in understanding or knowing how to read and apply fundamental data in the market, there will be a pop-up right where somewhere above here, which will be a link to where you can learn exactly how to trade the fundamental data as well. Now we're going to start here with the technical analysis. So starting on the monthly time frame, what do we have here? Firstly, we can see how the market has just printed this information. Now after the information, you expect a pullback to the neckline before the continuation to the downside, and that is exactly what the market is giving us a confluence that we can definitely expect the market to continue lower. Now on the weekly time frame, what do we see? Now from a weekly perspective, it's clear that the market had printed this massive impulse. We got the correction, and the best way to measure that correction is by taking the Fibonacci there from the high to the low. Now we can see how the market had tested and rejected the 0.50 Fibonacci level, which giving us a further confirmation that we can definitely expect this move to the downside to take place as well. The market also printed a strong level of support. Once support gets broken, it becomes resistance, and we can see how the market is currently testing and rejecting that level, giving us a further confirmation that we can definitely expect the market to continue lower as well. Now if you drop down on the daily time frame, what do we see? Now from the daily time frame, we can see this strong level of that acted as here as support. So at this level over here acted as a resistance. Market broke above that, came to test it as support multiple times. We had that fake out, market broke back above, then finally broke below that level. Now we can see how the market pulled back to all of that support that is now turned resistance, and the market is testing and rejecting it quite aggressively as well. Now there's a high possibility for the market to continue all the way to the downside from exactly where it is now. We're going to dive into some of the data of why we can expect that to happen there as well. The next up we are going to take a look at is the COT data, so the commitment of traders, and this tells us what the biggest banks, hedge funds and institutions are doing in the market. Now we're only going to look at the data for the CAD, so all currencies trading on the spot trades against the US dollar. So when you look at data for the Canadian dollar, you're actually looking at data for the USD CAD. So you can see here based off last week's report how hedge funds came in and they further added another 4,896 buy positions, and then they went and closed 3,562 sell positions. So you can also see how the overall net positions had increased with over 5,000 positions there as well, giving us a further confirmation that we can definitely expect the Canadian dollar to increase in strength over time as well. Now next up we are going to look at the sentiment data. Now the sentiment data tells us what the retail traders are doing. Now you can see how 61% of retail traders are short. Now I always say that you want to be on the opposite side of what the retail traders are doing, but if you drop down on a lower time frame, you'll see how this market had been pushing up quite aggressively to the upside, and that was obviously just to grab that liquidity from the retail traders. And we can see how the market had finally started to melt to the downside. And we can see how 61% of retail traders are short and 39% of them are long. And consider yourself wiped out if you have bought the Usdcad there as well. And the next thing we are going to talk about is the Canadian dollar interest rate decision that was released today. And we can see how the Bank of Canada actually came through and they hiked interest rate with a half a basis point, taking it up all the way to 1%. From their previous quarter basis hike all the way to a half a basis point hike, and the interest rate is now sitting at 1%. Now the reason why high interest rates attracts investors for any currency, because why investors like to invest in currencies where the returns are a lot higher as well. Excuse me. So we now know that in terms of the Usdcad, we can definitely expect this move to the downside to take place here as well, because we're expecting the US dollar to decrease in value against the CAD, because as I said, the interest rate had went higher for the Canadian dollar as well. And as a general rule of thumb, higher interest rate increase the value of any country's currency, and we've seen that with the dollar as well. Higher interest rates tend to attract foreign investors, increasing the demand for and value of their home currency, as I've explained to you guys just now. So that's it for the USDCAD. Meltdown is expected, whether you're liking or not, whether you like it or not. If you bought the market, good luck. If you're looking to sell the market, let's go. Thank you for your time. That's all from my side. And as always, cheers for years.